I'll never offer a founder a deal that I wouldn't take if I were in his shoes, because that's also my brand. I'm never trying to be kind of penny wise, pound foolish. We're building partnerships for a very, very long time. And one of my founders said to me one time, Mor, how many companies did you invest to today? I don't know, maybe it was like 80 or 9, maybe 80 at the time.
Yeah.
And he's like, for me, when I look at this, it's like you have 80 children that you really love and that you believe in them. You believe in them and you'll support them. You'll do anything. But I have just the one. And this is my life. So first of all, I said to him, it's not fair because you can't choose between children. We really love them wholeheartedly, everyone, with their pluses and their minuses. And this one needs more help today and that one tomorrow. It doesn't matter. You care for them all and you don't discriminate like that. So it's like it was really hard to say that to me. But I understand that because I will never offer you a deal that I wouldn't take if I were you. If this was my one. As I feel that there has to be trust. The moment that we invest, we're partners. There's no two sides of the table. There's only one. There's no sides. There are no corners. It's a round table. Like we're all here together and we're going to build this together.
Welcome to the iAngels podcast. Buckle up. This episode is brought to you by Cards Biz, a business card too good to give away. This episode is brought to you by Better Weight for Life, transformational weight loss aid, led by U.S. board-certified physicians, providing access to GLP-1 medications like Wegovy and Zepbound that are proven to help you lose weight and keep it off.
Hello, Mo.
Hello. How are you?
I'm good. I'm good. I mean, we had such a lovely chat before, so I'm already smiling.
Yeah. That's the point. Let's hope everybody out there is smiling as well. That's how we started.
Yeah. So we already agreed we have maybe too much to cover in this call. So I would love actually to start with the end. Okay. So for people who don't know you and don't know the unique function of iAngels in the Israeli startup ecosystem, why don't you give us like the 2-cent tour, right? Like who's
like
Mo?
who we are. Who am
and
I?
who you are. So
Fantastic. Okay. Start from the end.
But yeah, that's how we are.
So I'll start with iAngels. iAngels, we're an investment house. We've been around for like 13 years now. We really started off as a co-investment platform where people could invest with us. But today we've kind of evolved and we have like other products, like our fund products. And so essentially we're an early stage VC. It means that we're coming in where it's kind of like the first institutional round where a company or startup is looking to raise like a little bit more significant capital, like 2 to 7, 2 to 6, something along those lines. And we can come in, we can lead with like 1.5 to 2 million. We generally are kind of very active. We're looking for like to really build partnerships and long-lasting partnerships with founders. We're very good at what we do. We've invested in over 120 companies over the years, deployed over $550 million. We've had 27 profitable exits, and we really have like a great spectrum of experience of like leading a seed and taking it all the way to IPO and sitting on the board of a publicly traded company. We have investors from all over the world that invest with us and are looking at us as like the eyes and ears of what's going on with Israeli tech. And that's really quite exciting because there's a lot of opportunities to open doors in different places in the world and to really kind of capture that, I want to say, value of the network of networks, because I think in many funds, it's like really based on just the GPs, but we have this immaculate network of ultra high net worths, millionaires and billionaires who've built businesses all over the world. And we many times can kind of pull that value in and help any startup. And so we're really looking for great companies, big problems in sectors that are booming. I want to say that our bread and butter is really fintech. I happen to have like the beta side of the world kind of at home next to me. So it's always really fun and interesting to test these things out. Cyber security, enterprise software. We have a lot of experience doing interesting things in health tech and in like different sectors like automotive and things that we can touch on later. So from a mandate perspective, we can really do anything, but looking for high growth companies, for oriented, AI driven or AI native, fantastic founders that are really looking to have a fantastic journey together with us. A few words about myself. So I'm Mor Assia. I'm a founding partner and CEO of iAngels. I come from tech, so I think it's like always a great way to hit it off with founders because I was a software developer myself. at a tech role at 8200. My bachelor's is in mathematics and computer science at the Technion. I was a software developer for many years. I worked for SAP in the infrastructure group of their flagship ERP product for small, medium businesses called Business One. And I did my MBA at Columbia University, where it was still kind of cool to do that. But maybe it will one day be cool again.
Make Colombia cool again. Make Colombia cool again.
Yeah, it was a good experience at the time. Today, it's like, I'm like, putting it down in my CV, like, scratching it off. But seriously, I had a great experience. And thereafter, I worked for IBM and Amdocs for corporate strategy. So that means essentially we're looking at how to diversify product offering, looking for M&A targets, working with younger startups, and looking to kind of incorporate them in that kind of huge corporate structure. But it was fascinating. Like, investing was always kind of in the background. We come from a very active investment family. And we know a lot of folks from
So how about you? How we spend a little time like this? Because like there's a lot of information there, but I want to get to the nitty-gritty. So like you come from a bit of a high-tech royalty, right? So it's like when like how was the the Shabbat dinner context of it? Like
so it was
how was that part of your life?
really, this is like all we talk about. This is all we talk about. Who founded what company, who sold what company, who invested in what company, who started working on what, who wrote, like, just think about it. It's so crazy because like both of mine and my husband Yoni's family, they're all coming from tech. And we knew a lot of folks, like a lot of young founders coming from 82 and 81. So we always knew like who was working on what. And that was always like the talk around the Shabbat table. Now the son of my friend started this thing, and I was my friend started that thing, and who's invested in what, and maybe you should invest, and like all the time we used to talk about what's going on. So it was a very kind of active and lively discussion, and definitely one of the motivations, because we felt, okay, like we're kind of like the young crew, like we have like really proprietary deal flow. We know a lot of founders, a lot of cool teams.
Before we move to that, and bear with me because I think it's fascinating.
Okay,
I can
go back to Shabbat dinner.
I want to go back to Shabbat dinner, and I tell you where I'm coming from. It comes like my earliest business memory is when I was 8-year-old, and I accompanied my father to a third world country to negotiate with the central bank an agreement, right? So that's like my earliest
very good memory, core memory.
Yeah, and I too became a victim of becoming an entrepreneur over life. Like it's like I don't know if I had a choice, but I'm actually but I'm interested. Like, what is your earliest memory or memories as when you were growing up in the context of high tech and business, if any?
I actually never thought I was going to be a founder. Never thought I was going to be an entrepreneur. My father was part of the management team of Amdocs for many years, including the time where they IPO'd, and was there for like, I want to say 20 years or 20, like the majority of his career. So I was really like an Amdocs kid. I was like, at the high of all highs of like high tech in Israel, where they would send you as a family for like a holiday in like a princess hotel in Eilat and whatever. And it was like really, really like fantastic days and including, by the way, Bug 2000, sitting on the clock.
Oh my God.
Waiting for that, that clock to change, and nobody knew what was going to go on with the world, very much in the context of AI today. Everybody thought the machines were taking over.
How big a thing it was at the time. I don't think people realize how big a thing
it was. It was crazy. People thought that it was the end of all ends, that, nothing is going to live after that. So really and when the company IPO'd, I remember I was maybe in middle school or something, like the first thing I would do is my brand flakes. And that there was the Yediot paper, and it was much slimmer at the time. And you would switch it to the back. And in the back, there was a tiny, tiny section that's called Israelis on Nasdaq. I don't know if you remember that. Israeliyat Nasdaq. It was like a tiny section just with the companies that are listed on the Israeli companies that are listed on Nasdaq. It was like, I don't know, maybe 20 companies. I don't know. And I would always check how the stock did. And it was very much kind of in that framework. But when I had to choose a major in high school, I kind of went by elimination. I'm like, I don't want to do biology. I hate the teacher. I was really good at physics. I got 100 in physics. Maybe I'll do physics. I got 100 in computer science. Maybe I'll do that. And I remember my dad told me, he's like, there's like a limit for women in high tech. There's always a glass ceiling and whatever. I was like 16 or something. Talking about, by the time I get there,
Yeah. Did
there's
you
there's
did you actually
there's
think
no ceiling.
did you actually think that?
Yeah.
Yeah.
Yeah. I'm like, I get it. You're coming from a very kind of more traditional mindset as you're seeing what's going on in large organizations. But I'm like, in 15 years' time or 10 years' time or whatever, I don't think it's going to be an issue. And I'm just going to go for something that I feel is very intuitive for me.
Mm-hmm.
And that's going to be easy for me. Like, it's going to be easy for me to do math and physics and computer. Like, I want, and I think it also goes, especially for children, completely different like category of conversation. Children feel empowered and it grows their confidence immensely if they're successful at what they do. And if you
Sure.
go and you study something that is going to be intuitive for you and you're going to score, then that creates really the backbone of building personality and building confidence in what you do. That really kind of directed me at choosing that. And I'm like, everything else was going to solve itself out. It's going to be fine. So that was a core memory, I guess. And I also did a relocation when I was a kid as part of Amdocs, moved to Maryland, Rockville, Maryland for a few years. And that has really kind of shaped me in thinking that this is an industry that I love. This is somewhere I can
Why
really excel.
specifically the relocation?
Because the relocation, we moved to like a neighborhood. There were a lot of, Amdocs
Mm.
folks that relocated there. So it was a very kind of Israeli, you call it the kibbutz, like a very Israeli oriented, but everyone was working for the company and everybody was kind of had that thing in common, which is very, very special. Just think about it. And that experience, I went to public school, not a Jewish private school, like nothing. Went to public school and it was very, very, very diverse, very international, very kind of team oriented. There were like different kind of groups. And it really also kind of, you have to evolve. You have to be very agile. You have to kind of find yourself and find your center. And it was like exactly as you see in the movies, there were like bullies and there were like weird stuff going on. The first day I came to school, I sat down, it was English class. I don't know. I sat down, some guy came like, this is my seat, get up. I'm like, okay, dude, like, got up, moved to another seat. Same guy comes to me. This is also my seat. Get up. And I told him, and I think to myself, like I was 10, I'm like, and I told him, unless you have two bottoms, you can't have two seats. So choose this one or the other one. And wherever it's not, I'm going to sit. But not every kid can do it. Like you really kind of, you have to come like, and through that course of time that I was there, this is where I got my like perfect English and my desire to come back maybe for higher education in the US and have like different kind of experience for grad school. And yeah, and like, this was really my upbringing, but I always thought to myself, I was always going to be a corpy. I loved like, that like the feeling that you're a part of something really big. There are a lot of resources and there's a lot of navigation and you can be, and then I think, much, much later in life, you kind of find that definition that if you want, you could be an entrepreneur. You can be an entrepreneur in large organizations. And in every interaction I've had with my managers, and I would tell them, I want to do this and I want to do that and I want to do that. And then they would tell me, this is like a 3-person job. Like, this is like not possible. And I told them, if you're going to limit me, it means that the organization can get much more value from me and you're not using it. You're chopping my wings and you're not enjoying the full potential of what I can bring you. And then apart from the fact that I'm going to be, less motivated, that you're legit like losing money. Like does not make sense. And in the end, many times I would do all these things I want to do. But I was always kind of going through that route. I was with Yoni, my husband we were 20, still in the army. And he was always the founder. He was always the entrepreneur. And that was how we split the world. Like I was the corpy and he was the entrepreneur and we loved it. And like, that's how we divide and conquer. We got all the perspective. Today we divided like public holdings and private holdings. And that's how we kind of rule and conquer the world. together. But it's really fun because we kind of evolved together and kind of supported each other through these different kind of stages in life. And I remember when I wanted to found iAngels, he said to me, "What? Both of us are going to be like entrepreneurs from a risk perspective."
Did you
I
feel
go,
that okay? So let's go to that moment.
yeah,
That's a very
yeah,
interesting moment. It's like because what I hear you saying is that your identity was very tied up in, you call it corporate, right?
yeah,
Being the corporate the corporate boss,
girl,
gal. I don't know. It's like actually I still want a gal. I just if it's
yeah,
more respectful, like the cap and the t-shirt and
yeah,
and all that.
totally. Drinking the Kool-Aid, totally. Seriously, loved it. I loved it.
So what happened? How come you got infected? How did you like? What made you decide, or maybe you didn't decide to chew glass?
Yeah. So maybe this is where I'm gonna weave in that I have 5 children,
Okay, which is a
and
startup by itself, at least 5 startups by
I
itself.
deserve a medal. I
You
thought to
do,
myself, I'm
you do.
gonna I want to just give them to myself because I think I already know when I'm supposed to get it. I said maybe I'll buy the production line that manufactures them in China so I can just give them to myself. And then I said I don't even need to buy that because I can just digitize it and just give myself digital medals all the
Yeah,
time.
like gold stars nonstop. It's like
Oh, totally.
no, but
After,
seriously,
yeah,
like
no,
we're
I'm serious.
laughing,
This is
but
where
you're
I'm bringing
laughing.
it.
Like
Yeah.
I have one child, and I'm with co-parenting with a very dedicated
Yeah.
father, and again, like I said, so like if I had my hat on, I would like take it off. Seriously.
If there's anyone listening that thinking about this, always have another kid before you realize what you've done, because you're not going to have another kid if you realize what you've done. And also that there is somewhat of a decreased marginal effect. Because just think from 0 to 1, it's 100%. And then from 1 to 2, it's 50%. And then
But it doesn't get easy. It
no,
never gets easy. It never gets.
no,
It's not like it's easy.
no,
No,
no, it's not easy, but
no.
they're really, really sweet. And when people ask for donations, we're like, okay, we gave it home, for the GDP, for the future of tech, for for DNA, whatever, we gave it,
Yeah.
I did my bit. But when I remember, and again, after a week, I came back from a master's from Columbia and working for IBM in Manhattan. I came in and worked for Amdocs corporate strategy, which is a very, very kind of fast-paced, male-oriented, delivery overnight, over the weekend, or very, very crazy type of mentality of work, like the stories about consulting and the classic consulting and what you can imagine. And I was at the time pregnant with Anne, my daughter, number 2, and I remember it was really, really crazy for us at home. And then we started a conversation because I had the idea for iAngels from before, but I'm like, I'll land in
And
Israel.
what
We'll
was the
see
idea at
who
the
is
time?
against who.
What was the idea at the time?
The idea at the time was that something is broken. Israel, there were always kind of these super angels, people who are very, very uniquely positioned from I want to say from a deal flow perspective. And also they add a lot of value and they really care. And it's not, I don't know if everyone knows, but an angel is an angel because it gives the startup the kiss of life. And in most instances, it could be $50,000, $100,000, doesn't matter. But that gives a lot of validation in the very early days of startup life. And then what I saw when I was living in New York, that people would get deals coming from Israel only once they cross the Atlantic. Only if after kind of that early value chain in Israel would happen, then people will come to them and say, now you're going to put big money, big valuations. And these guys would always feel that they're suffering from adverse selection, that they don't know where the industry insiders are looking to invest. And they always get a worse deal. They're never coming in together.
Yeah.
And that creates a sense of misalignment, I would say. So I recognized this when I was working in New York, and that to me, I felt.
And I want to stay a second because that's a non-obvious thing. Again, maybe today in retrospect, but it's how did you see that specifically?
Because I saw, for example, I would ask people what they think about the ecosystem, because even at the time, people were talking about, Israel is a startup nation, and they were interested in what was coming out, but there was a lot of frustration because they felt we don't want to invest because we're always getting screwed. We don't want to invest because we feel like, these insider guys, they're like, they have their little club and they're already kind of deciding, and then they're coming to me and I feel like I'm never at the table together.
And who did you hear that from? Who was telling you that?
From business people, even like people within my organization, or people in even when you're sitting in MBA, because essentially think about MBA. There's a lot that you learn, but you really come in very close contact with the future leaders of the world. The people who sit next to you are going to be CEOs of companies, are going to be decision makers at large organizations, are going to work in consulting or in finance. They're going to value your company before IPO. They're going to work for Goldman. All these guys are gonna be material in this generational success. And when you hear people kind of like, yeah, but or we never see things when when other people get like the better deal. We always get the shorter end of the stick. And it doesn't matter if at the end of the day, people will invest just because of they have to, but you want people to be advocates of these companies, because just like I was at IBM and I was looking at acquisition prospects, I want people to want those deals. I want people to say, no, this is a great deal. Or maybe I even saw it before. It was too early for us, but whatever. But we've been in touch of I know about these guys, not only to be those guys that come and do an acquisition and they're kind of always in the dark as to what the industry insiders, the people on the ground are actually thinking about this or how they're thinking about this. Now, it doesn't mean that it's consistent across the board. Obviously, Israel, again, it was always on the map. Everybody, second largest ecosystem outside of Silicon Valley. There were already significant acquisitions. Think like SAP. I worked for SAP. That was because they acquired Shai and Reuven Agassi's startups and founded an R&D center in Israel post-acquisition. So there are a lot of acquisitions. But until that day, there were much more IP acquisitions. People were buying the product, not necessarily integrating the team. And there was also a notion of Israelis that are more quick to sell or quick to exit, rather than build large companies that can be sustainable, that can be publicly traded, that can kind of shape the world. I think over the last, I want to say even 10 years, we already seeing that, that paying it forward element. A lot of founders are going back and founding bigger companies with bigger dreams and bigger aspirations. And they're going to say, I'm going to do it differently this time around. And also teaching younger entrepreneurs on everything that they've learned. And that's so important. And we see it happening today. Also with large acquisitions, but big companies, big success stories, huge organizations, thousands of people working and paying payroll every month to thousands of households. That's so inspiring. So there's definitely been a shift, but at the time I recognized that there's some kind of gap or bridge that can be created and kind of give people that insight or that visibility to what's going on really on the ground with earlier stage startups, getting them aligned and in early.
So that was the idea. So what, from idea to action, what did you do with that concept? I mean, you're smiling. I see you're smiling.
So many iterations. No, I'm kidding. So I'll tell you, I think any startup founder, you're kind of you have to be an optimist and you have to be in love with what you're doing. Otherwise you won't do it because it's too
delusional.
Risky.
I would say delusional. Yes.
No, I'm sugarcoating it. Sugarcoat it. What do you care? Everyone's listening. But I really felt that there's something that can be done. And I'm a software girl. I'm I'm going to build it and they will come. It's just going to happen, organically. And it's interesting because we're not just a VC. We're actually a software company. We're actually a software high-tech startup. And we've had through all these years an R&D team, and we really developed a state-of-the-art platform that's very data driven. It gives a lot of visibility and a lot of granularity into portfolio management and due diligence and everything that we're doing, because we said we're gonna educate the next generation of angels, and we're gonna create a vehicle that's kind of the goal.
And that was the concept from day one?
That was the concept. It's going to be the Goldman Sachs of angel investing.
Okay.
You're going to have everything. And we're, instead of in being just an angel investing 20,000, 50,000, whatever, and see you at the exit, we're going to group them all together and come in with a lot more influence and impact and majority stake in the company. And then you have the ability to exercise preemptive right, meaning to follow on in future rounds. And that is really kind of like the building blocks of how to be successful in this asset class. Because if you're an angel and you're just spraying and praying and investing 50,000 and like see you at the exit, and there's no economics of scale, because just to have my lawyer review all the documents is going to cost me $10,000 and I'm investing $50,000. Like, it doesn't make a sense. So they don't do it. And then they can practice preemptive. And so they're diluted to death. And then there's like, like nothing left of it. But if you come in together, you put in $1 million and I do one time legal and everything and all the shareholder rep for everyone and give them that value, and enable them not only to get the updates, but also to exercise preemptive and be active as they want. And sometimes it can change, and we'll touch on it, but that gives a lot of value. And that's how people become successful in this asset class. Okay. So that's what we wanted to build from a product perspective.
And how did you guys start? Like, what was the first step? Because you have what today we call the cold start problem, right? You need both a platform,
right? And
you need the supply and you need the demand.
Exactly. Wow. You got it. You got it. I don't know how you managed to get it.
You see, no hair. Yes.
So on one hand, we need demand, and on the other side, we need supply.
And you need the product. And you need the product.
The solution. Exactly. Which is, again, like for us, it was really the core, because we believe, like, coming from like a very data driven, I want to say, education in terms of the career. Okay.
Yeah.
That this is the way that it should be. Not ambiguous, not fluff, not like, should really be like what it is. And then we needed to get supply, meaning to get like really cool startups. And then we needed to get demand, meaning that we can fulfill the position.
Yeah.
So, and that's always difficult to do. And what we started doing was kind of either by self-origination or through affiliation with, like, the super mega angels of Israel, that some of them also invested in our company and became partners. So really try to, for them, for example, if they put $100,000, I give them leverage. I say I'm going to bring another 300 or another 400. All of a sudden, this is interesting. Or do, independent origination through people that we knew from military, from college, different, a friend of a friend, a CTO friend of my CTO friend, like all these things, and do due diligence and really kind of come up with what we think about it. And then we had to go and slowly grow our investor network.
So give us examples of where was the pushback and where was it's a no-brainer, if any.
So the pushback, I think in the beginning, because we didn't have many investors and we didn't have still kind of independent wealth to, put on every deal or significant one. I think, like, with founders, and you need to think about it, this was before angel syndicates, like the model even existed. It was very early days in terms of, like, financial product structures and stuff like that. So with founders, like, if we could get on the deal, they're like, okay, but like, how much are you going to put? And then I couldn't go back to him and say, well, it depends. Like, what happens? Because they want to close the round. And if the round is oversubscribed and there's, people standing in line, he wants to be able also to tell other investors around the table that we delivered. Yeah. Like, he's not going to choose us and then we're going to overpromise and underdeliver. And then I'm making a fool of myself, not only in front of the founder, but also in front of all the other investors in the round. And then the founder looks like a fool, where he's seated with them. So I think that was when we realized that we need to have some sort of, like, really risk. Like, we would risk our equity money to deploy into deals and say, you have 300. And it was like early days.
No, you have free money.
Doesn't matter. If I have to take from the equity money that people invested in my startup, my nostro, it's not a nostro even, because it wasn't like
it's almost like the all-day merchant bankers, like the merchant bankers of yore, right? That's like, actually, I have a.
But I remember. We would have deals where we would say, we're going to bring you 250, and then the guy says, but I need 400 if I close the round, and maybe somebody else wants 400. I'm not going to split it to two investors, so either take 400 or no. And we're like, okay, what are we going to do? We want the deal. So we would have had to take a lot of risk in the early days. That is kind of like on us.
Yeah, I mean, I can see, I can hear it in your voice even today,
Yeah.
right?
And it actually ended up happening. But like sometimes, like, it was really difficult, or a lot of founders was like, okay, so tell me exactly how it's going to work. Is this crowdfunding? Like, where am I going to show
Yeah,
up? Is this going to show up on the news somewhere? This is private information. This is a private company. So that always had to be kind of mitigated because that model didn't exist before.
yeah,
Of like a VC, like we're a VC that's built upon about 1,500 LPs that we have relationships with
that's a lot.
from all over the world.
That's a lot.
Most VCs, they have like 1, 2 institutionals and that's it.
Yeah, yeah.
So just think about like,
And there's a call, and there's a contractual call of money and so on. It's not like,
but no, like what we sign is what we sign. And it was also kind of our reputation
yeah.
personally. So that was very important for us for early days.
So what was your bar? What was your confidence bar to, or like,
In terms of round size?
no, in terms of everything, because like you are risking the firm's capital right from day one.
Mhm.
So it's like I'm not even asking due diligence. I'm just asking, how did you approach the approaches in the early days to decide, yeah, we're gonna do it. Like we are gonna put the risk.
We
And how
had to be sold. We had to be really sold. It had to
Okay.
have conviction. It needed to be something that I can tell people, this is like my life. This is my,
Yeah, yeah.
it's like
So
my money.
so so actually it's a two-stage question. What did you need to be sold at the time, and has it evolved to today? And
Oh
like what
wow,
do
it
you, okay.
evolved immensely.
Yeah.
Because I think at the time, like we really wanted to have, like, we could be the top off. We used to be like the top off of the round.
Okay.
Like we would be the one like closing the thing down. And in the early days, it was small checks. It was $400,000. It was also kind of different times because like
Yeah, yeah.
back then, you would have rounds of $1 million or 2 million. It was like
I mean, it's still a
smaller
lot of money. I
rounds.
mean, I know
It's still a
in
lot of
today's
money.
world that people raise $50 million
Yeah.
without a deck doesn't sound, but
Yeah.
$500,000 or $250,000 is a lot of money. Yeah.
Yeah. But I mean, today we put in 2 million and we lead.
Yeah.
We lead the round.
Yeah.
If someone's raising 5 million, I don't need anyone else in the round. Can lead
Yeah.
the round. And I'm not saying that from like an ego-driven place at all. I'm not saying it because if I don't lead, I'm not going to invest. It's not about that at all. It's just we can price companies. We have a lot of experience. I'll never offer a founder a deal that I wouldn't take if I were in his shoes, because that's also my brand. I'm never trying to be kind of, penny wise, pound foolish. We're building partnerships for a very, very long time. And one of my founders said to me one time when we were talking about, like, I don't know, valuation or whatever it was. And he's like, he's like, Mor, how many companies did you invest to today? I don't know, maybe it was like 80 or 9, or maybe 80 at the time.
Yeah.
And he's like, for me, when I look at this, it's like you have 80 children that you really love and that you believe in them. You believe in them and you'll support them. You'll do anything. But I have just the one.
Yeah.
And this is my life. So first of all, I said to him, it's not fair because you can't choose between children. We really love them wholeheartedly, everyone, with their pluses and their minuses. And this one needs more help today and that one tomorrow. It doesn't matter. You care for them all and you don't discriminate like that. So it's like, it was really kind of hard to say that to me. But I understand that because I will never offer you a deal that I wouldn't take as if I were you, if this was my one, as I feel that there has to be trust. The moment that we invest, we're partners. There's no two sides of the table. There's only one. There's no sides. There are no corners. It's a round table. Like we're all here together and we're going to build this together. I'm going to be whatever you want me to be. You want me to be more active or less active. You want to be a sounding board. I want this to work.
I do want to like, because we can hear too. In the beginning, when everything was a tight war, what made you pull the trigger?
Listen, this part has not changed materially.
Okay.
Because for us to, and this is like VC 101.
Yeah.
You invest, doesn't matter. You invest 500, invest 1 million, invest 100, doesn't matter. You own a part of the company. You need to try to think about the situation where that can become 15x.
Okay.
Over dilution, over time. Like you can do sensitivity analysis around it, and this is what we do. Different scenarios going to take more time, less time, 3 rounds, 5 rounds, 50 million to raise to get to product market fit, $2 million. Like you have to kind of take everything into account and really think if there's a chance through this lifetime that we're going to do together, if there's a chance that this is going to be a good business. And it happened, by the way, many, many years ago, even, that we love the business, we love the founder, and I really believe it from a technological perspective. This is the future. And then when we put in a model, you realize that you can't make money ever. Like me, when I came in that deal, in this specific deal, because of the valuation and the ownership and how much money they need and how many rounds and how many years, IRR negative, like doesn't make sense. So we can't invest. And that has to fit in with so many other things, like from the sector, if it's growing or not growing. Again, how much time to product market fit, to initial traction and validation of the business model. How's the founder? Is he going to be the leader of this company, not through only early days, but also through later days? Because I'm not investing in companies because I like the IP and I want to, curb the management team and founding team. I invest in the founding team. I want them to be the ones to take this through. I'm not a private equity. So it has to work together. Can this person take it through? What does he need around him to make sure that he can evolve and grow into that place? So there are a lot of different things. And I think that has not materially changed. But what has is, I think we've gone through many cycles in the last 13 years. I don't need to share. And the climate and the mindset has shifted. I think in the early days, we took more risk on companies that are either dependent or even based on hardware, that it's a little bit harder, for example, a little bit harder in this climate to do, because hardware requires more time and more capital to really bring it to kind of much more of a maturity.
I've had some hardware founders here on podcasts, and they say there's a special place in hell for hardware founders. That's
investors. No, I'm kidding.
Investors. Well,
No, I'm kidding. I'm kidding.
To each his own perspective.
No, they're the real angels.
Yeah.
No, it's very difficult. It's different. But listen, not even so many years ago, maybe 5 years ago, you can get Nasdaq multiples of like 100x on revenue, and today you can get 7x on EBITDA. So that changes. Or you can be pre-revenue. Companies could go public without having any revenue because they have such strong and interesting IP. And today, companies are penalized in capital markets if they're losing money quarter over quarter, and they don't have like a clear trajectory to profitability. They're penalized. And that has changed, I think, in the kind of like last, I want to say, downward cycle in capital markets, how companies are really evaluated. And that goes down all the way in the value chain to early stage investing. And so I think that you have to kind of, as an investor, as a founder, and I'm looking at, my own company and business, you have to also be agile and adopt and align with like, what's the opportunity? Like, how is this going to grow? What are we doing with this? So I think with every innovation cycle, I think the best investors or the best founders, and it goes hand in hand, can kind of understand what is expected, what is the benchmark, how are we growing this together, and then kind of evolve or be agile to be supportive of the innovation cycle, instead of like, trying to force that square into the circle. So that kind of evolution is really required in my humble opinion.
So one thing that actually be very interesting to hear from you, it's like, and you mentioned it in passing about, like, you say, hey, I'm investing, I'm not private equity, and I need that set of founder or founders to be able to go the distance. So what makes a good founder in your view?
Well, we touch on a few things. You need to be like an optimist and probably a little bit crazy. I love founders that have good and good experience. And I want to say some background of like working together as a team, because it's evidence of how they're going to work together as a team in the future. So we see a lot of founders like, they met in the army, or they were in a college or whatever, and they did a project, and they did a business project, or this incubation, or whatever it is. It kind of, you want to see that strong connection. Also, when I started, it was kind of very cookie cutter to have a 3-founder team. Today, it's like more of a 2-founder team, but you need to bring kind of like the well-rounded management around you and people who are going to support your journey. So like, doesn't matter, but we prefer someone who works well together, I think we saw a lot of companies who also invested in companies that it's a single founder, but it also says something about the fact that you want to do this solo, that you don't want to have anyone kind of outshine you or work with you. And sometimes it's hard. Like
Yeah.
it's like a really tough life.
It
So we
is.
kind of
Yeah.
prefer to see someone who's like working well with others, can play together. And no, it's good. It just means something about you of working as a team. But for example, if someone is doing it alone, but he has a lot of experience of working in teams, whether in a prior career role or in
Yeah.
the army, so there could be like different anomalies. We want them to, like, there are many times, I don't know many, but there are a few times where I would invest and like the founder would tell me, yeah, like, we're going to do in 1 year another round and it's going to be like 100 times like the valuation or whatever, if you want. And I'm like, I've done this like a couple of times. So I'm like, okay, if that's going to happen, fine. And in my model, I put in like half of that just to be a little bit more conservative.
Even 50 times
Even
after a year. 50
exactly.
times after a year is like,
No,
that's crazy.
even 30 doesn't matter. Like whatever.
Yeah.
Like it was really outrageous when he said that to me. And I said to my team, like, because I wanted to invest, I'm like, listen, this is how I'm looking at it. Even if it's like 50%, even if it's 30%, it's still like
Good.
worth it. And he ended up doing it.
Wow.
What he said he was gonna do. And then I never doubted. It's not about doubting him. Like my job is to look at the best case scenario and the worst case scenario and to product sum that stuff and to know that in every different scenario, I feel comfortable. If I have to save the company, I feel comfortable. And if I end up like not being able to invest because it's like so expensive, like next, also I feel comfortable. But like to really kind of test how I'm feeling about it, I want those founders. And I will also tell them if they're like living in a movie or like living on Mars. And I would say, yeah. Because like sometimes they would look at something that works well on the Excel, but doesn't work well in reality.
Yeah.
They're like, okay, that's, we're going to make 2 million next year. Okay, how many customers do you need for you to make 2 million? 200. Okay, you're selling to large enterprise. How are you going to onboard like 200 customers by next year? So like I have to do that, sanity check with them sometimes.
Walk it backwards.
Yeah,
Walk it backwards.
exactly. So I think that motivation is very important. I want people who are looking to solve big problems in booming markets. I want to see these days, because we're investing several millions, and I think it's also in line with climate, already kind of wanting to look at some level of validation, either from design partnerships, initial sales, someone who's not Israeli. Israelis, by the way, investors in other markets, they kind of discount that altogether. They say, oh, this is your buddy. They say, okay, you got 2 companies or 2 customers and they're paying 20,000, 50,000, whatever it is, but they're Israelis. So you probably met them in school or something. They're your buddies. So they're like, helping you. But it doesn't mean that you can sell the same way to an enterprise in the US and to have them who don't know you and don't know anything about you pay 50,000.
To be fair, I believe this is right.
Yeah.
Personally, even, I mean, not the friends thing. It's just that selling.
The brotherhood.
But sisterhood, brotherhood. But even putting that aside, next year you actually did enterprise selling in Israel, right? It's just a different skill set than doing an enterprise selling in Vienna.
Agreed completely. Completely.
No, and not the brother. Like it's not all friends and friends helping out. It's just a different process.
Yeah, but he's going to give you free money. But I mean, for sure. But it's just easier to get to somebody's table. It's easier to get a meeting. And if it doesn't work, it doesn't work. It doesn't matter.
And you don't need to be that organized. You don't need to be that tight. You don't like people are much more willing to do that. And I have this a lot, and I'm sure you have it too. When I talk to entrepreneurs that are starting out and they say, I want to use Israel as my test market. And I say it's like
waste of time. It's not a waste of time.
I mean, there are exceptions.
Listen,
there are exceptions, but they're really, really far in between.
I'll tell you. Depends on who you're selling to. But in many instances, if your customers are banks, for example, in fintech or in cyber, go through that selling process in an Israeli bank. Doesn't say anything about your ability to sell it abroad. And if anything, they'll pay less and they'll customize more. Yeah. And it'll be difficult.
You'll get the wrong feedback. Not only that, even if you're successful, you might be learning the wrong lessons. You might be wrong.
And by the way, I don't have anything against banks in Israel. I just say that if you're targeting banks and if you have $4 million of equity, if you spend a year and the conversion cycle is a year, Because even if somebody wants that, you have to go through compliance and legal and everything else. And so if you spend a year or a year and a half on working that out in Israel without paying any attention to what's going on in your target market audience with the target market audience, then you may have lost a year or a year and a half, and you're not necessarily going to get the feedback that you want to make you better at targeting another audience.
Totally agree. Totally agree.
So if you can do it like on the way and it's okay, it's like, okay, we're testing these things out here and it doesn't take away from mind share.
And it's more about the product development and not so much about the marketing product.
Then it's okay. Then it's okay. That's not a problem at all. Logos are great. Get as many as you can. It's fantastic. But don't do it one after the other.
And by the way, it's the same thing as you are trying to get a bank in the Philippines, right? Unless Asia is your market, right? Target market, and you're going for it. It's the same thing.
It's not exactly the same from a cultural perspective, but yes.
I'm talking like some sort of like enclosed market.
You need to think, okay, you raise money for, by the way, when I started, the cookie cutter was 18 months. Now the cookie cutter is 24 months. And please have a contingency plan for what happens if you hit a wall at 24 months. So you have money for 2 years. If you're raising pre-revenue by the next round, you need revenue because you can't have that same story. No, well, previously you raised money, you didn't have it. Like what happened? Like you didn't progress, you didn't do anything. You need to have revenue. And you need to have revenue for where you're going to sell your product. If you have 2 years and then you're going to die, you can't waste a year and a half on something that's not going to create enterprise value for you, not skyrocket, but going to increase valuation in your potential to raise additional capital on top of that. You can't waste a year and a half on anything. You have to work like in parallel.
So let me work fast. Let me generalize this a second, because this is interesting. As somebody who sees a lot of companies intimately, right? What are the most common mistakes you see startups do or founders do in the early stages that they just can't help themselves?
I think something that is very much ingrained in kind of like the engineer mindset is to fix the whole problem. To fix the whole problem. Like, this is the problem. Until we kind of like cover all of it, the product is not ready. But like, you need to work MVP style. You can fake it until you make it. You can go and sell and say, today we're providing you with this part. And in our roadmap next year, I'm going to give you this part. But if you're trying to kind of over massage and over engineer, yes, especially today where AI is like floating, somebody's going to eat your lunch and you're not going to have material KPIs to show for the next round. And you're not going to have the validation and like somebody's going to move your cheese. Like
somebody's going to eat your lunch.
Yeah. So I think okay, over engineering. Okay, one. Sometimes you can say, again, I want to say always, if everyone is always over optimistic and they say it's going to take 9 months and not 1 year, and it's going to cost me 70% and not 100%, and you don't test case for that, then it's like in physics. Like in physics, when you shoot an arrow or a vector, if you have it like a 0.01 degree to the left, 100 miles, you're going to miss the target altogether. So you need to be able to first kind of understand that if everything goes amazing, it's going to work. But if this is 80% and this is 80% and this is 80% and this is 80%, we lost the market. Like we lost the market completely. So think about how you always kind of like go back to that and adjust and kind of align. Okay, like, target is moving now. Somebody else wants, my audience wants something else. How do we adjust? And also really think also about like conservative scenarios where it doesn't always go the way that you wanted. Not that I don't want it to go.
You know what's interesting?
But sometimes it happens.
Because what's interesting is like you said it, and I'm not saying it's a criticism. You said it, and I agree. The entrepreneur has to be optimistic, right?
Yeah.
You have to be optimistic. And then the problem is when you're too optimistic, right?
It doesn't even have to be. You can be optimistic. I'm going to tell you how I'm thinking about it to cover bases. If the guy can't listen, like he can hear, but he doesn't want to listen, then that's also kind of a problem, because life is dynamic. The market is dynamic. Like pricing is dynamic. AI is like, reshuffling everything and anything you knew about customer success, customer journey, writing code, testing code, launching new features, marketing, like everything. So if you're not listening, and if you can't move or be agile or
Yeah.
understand, because by the way, I can have that conversation with someone and I would tell him, listen, I think you're going to drive yourself into a wall. And he's like, I hear you. I understand. I work with my team. I disagree. That's a valid conversation. But many times people don't want to listen to anything that is contradicting to their truth or love. They don't want to go through the exercise.
Yeah.
And I think that's it's a muscle. It's a muscle that people kind of need to exercise.
I'm trying to remember who said it because it's not my quote, but somebody said it in the context of founders. But what he expects is strong opinions held loosely. It's like that. It's very strong opinions held loosely. So you need to be strong opinion, but when facts change, you change
No,
your strong
exactly.
opinions.
And I tell my founders, listen, you're the CEO. I'm always going to tell you the truth, the way that I see it. I'm happy to tell you what I would do if I were you. But I don't want to run your company. I have my own company to run. I don't want your job. I don't want your job. And I can respect someone who's seeking out opinions, looking to push the envelope, looking for devil's advocate, also on the board.
And doing 100 times.
And then they say,
Yeah.
I heard everything.
Yeah.
I compiled everything. I looked in it. I did some research, and this is what we're going to do. I respect that.
Yeah.
But you need to kind of be open to that, to hearing different things. Otherwise, you're just going to put on the board people are just going to have groupthink, are just going to constantly validate what you already think about yourself. And that doesn't create evolution. It doesn't inspire. It doesn't push the envelope in any way. So I think that's important.
So you mentioned AI quite a few times now. So maybe it's actually a good segue because that's one of the things I'm very interested to hear as somebody who has like a bit of a macro view of what's going on. Like, what's going on?
Okay. First, they say, and I know a lot of people when they say you can love him, you can hate him, you can believe him, you cannot believe him, whatever. I love like listening sometimes to things that Elon Musk shares because they're kind of incredibly optimistic, or like from his perspective or whatever. Everything's going to happen in the next 5 years. Everything's going to happen like whatever. But if you kind of zero in and look at and think about the essence, what do you think about the future? And I spent 3 years learning how to be a software engineer at the Technion. Okay. And I worked at it for like 4+ years. So I kind of, I got my stripes. I already did it and I know it. And when people say to me, coding is going to be only with natural language and you're going to say what you want and the machine is going to develop it, I have no doubt in my mind that we are very close to there. Because I've been playing around with it at home. I have a little Mac Mini, box that we developed, and I'm testing it with different things, with software, with operations, with finance, with a lot of different things. And we're very close to a place where it's going to be very stable, that you can communicate. You can already, like on Instagram, on WhatsApp, in any language. And it does a lot of things in a very, very fast way that saves a lot of money and a lot of work. And this is how I look at myself or, key people in my organization. Instead of doing labor, they can become really critical thinkers, strategizers, and let off some of those things that really take a lot of their time, don't necessarily give the organization the same amount of value, as they could kind of take from them. And I think, and I'm very careful with it still, and I see a lot of people saying, I'm like connecting everything, my email, my WhatsApp, my phone, my credit card, my bank, whatever. So again, listen, I'm a high-tech girl and I served at 8,200.
Yeah.
When I need to pay somebody, I don't know, whatever, he's like, oh, send me, a picture of your Visa card and I'll erase it. I'm like, dude, I don't send Visa. No.
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 And my social security and my social security number and my blood type.
Or send me, whatever, like, you want, I'll help you send me the password. And don't send passwords. And don't send I have the 8,200 ingrained on my heart. I don't do these things and I'm very careful. And this is why I have a dedicated setting that's very isolated. And for example, instead of letting him get access to my email, I created his own email. And then I said, can, test it out, for things that are less invasive to my organization. It is open. It's OpenClaw. Yeah, it's a bot that we developed on OpenClaw that's very kind of, helping us with things that we want to do in the organization. I think on one hand, it's interesting because we are a VC. And I think the pitfall of some VCs that they're finance guys only, but they didn't always come from building companies or being C-level organizations or developing a product and having to do with what it means to be a CEO of a company.
Their hands dirty in operations and the ups and downs and tribulations.
Right. And we are special because we also have our own company, like an Uber. Like, I have these things that we have to manage, and we deployed the technology and developed technology to be able to do it faster and better beyond anything that people can really do. And it's kind of like became our secret weapon. And now, because I'm techie, I can also kind of onboard a lot of AI capabilities that are going to make my business, bigger and better and easier. Even if not, just the exercise of doing it, like sitting here until 2 a.m. and like working on it, I think creates a very, very strong sense of purpose and bond with founders, because we are kind of trying to understand what's going to be their limitations. And many times, I sit with founders and I think this is a big problem now, but it's not going to be a big problem in 2-3 years, because, this is a solvable problem, and it's a solvable problem easy. And once we get kind of in full scale AI mode, it's not going to be a problem anymore. So that also kind of a lot of time guides me. And I think it's a really a fascinating time. It's really a fascinating time to think about really like the future of work, or like the future of education, or think about the future of finance.
Yeah.
And I think it's really exciting that we're experiencing it here. For me, I already thought to myself this was going to happen when I invested in Arbe Robotics. It was like almost like 10 years ago. It was autonomous driving. It's like creating like the high resolution radar system for the autonomous vehicle.
Yeah.
And how do you do it instead of doing the compute on the cloud? How do you do it fast in real time and on the thing, in a tiny thing that looks like an iPad or whatever? And be able to have like real-time insights into what's going on. And it's reliable and it's safety critical. So that was like 10 years ago. And to me, when I looked at that, I'm like, okay, for sure, that's going to eminent. But no, we're not there yet. Yeah. Like it took a moment. So now everyone, Waymo is everywhere, and like Waymo uses, our bed technology, but it's sometimes us, because we're tech-oriented and optimist, we think it's gonna, happen much faster than it actually does. And when you look at the world, it's gonna take a minute that everybody wraps their head around it. But I love being kind of at the forefront and being critical and thinking about how it can really change narratives and enhance, like, anything and everything that we know today.
But on the level of deal flow and companies and portfolio companies, so maybe what I'm interested to say is, like, you talked a lot about like your personal experience and your connection to it. But like, what are you expecting from your portfolio companies, and what are you expecting your next portfolio companies to be in the age of AI?
Yeah. So first of all, I think for existing companies, they really need to look left and right, because I see, for example, companies that I see today, they're incumbents. There are incumbents in their markets, but they're not AI native, or they're not AI first. And for these companies to kind of pivot around and kind of reintroduce the product or build it from scratch, that requires risk,
effort, and capital.
Because they can lose everything. Yeah. But on the other hand, if they don't do it, then someone is going to make it faster, bigger, better, easier, cheaper, whatever. And then they're going to lose control over their incumbency. And it's interesting because you can look at it from both directions. Even if you're, you don't even need to be a market leader, because sometimes the market is so big that there's enough for everyone. Like it's a blue ocean. But if you don't adopt,
and to be fair, we were there in the early internet age. We were there. Like, again, when Amazon was a bookstore, I'm not talking about what it is today. But like okay, like people forget. Like, it's a bookstore. It's like there are bookstores, but they're not. Selling online, right? They're not selling online, and then somebody comes and sells.
And they sold online, and then it's Audible, and then it's Kindle, and then it's like everything else. If I'm looking at kind of legacy companies, they need to understand what's going on in their ecosystem and see. And I honestly, I do motivate and support people to look and experiment with AI. It doesn't even mean that you need to rewrite your code, but how can you do more with the same stuff that you have? How can you create proactive customer onboarding and reach out and whatever customer, instead of just being responsive to customer tickets? How can you run your business in a much more efficient way operationally, and then you save, your capital? or how can you introduce AI to have, better resolution into code writing or testing or sandboxing and or for new features and whatever it is. So I think there's for companies that didn't grow up in this era, they need to find a way to kind of take parts of the business and try to onboard these capabilities, because otherwise companies that do it are gonna, be able to raise less money, less people, more revenue. Like they're gonna, just perform better. And for new companies, I always kind of, push and I ask them like if this is really going to be a problem now. I mean, some new companies say, "Oh, we're doing the same thing as these guys have been around 15 years, but we are actually managed to, get a product out in like 6 months, raise no capital, and like, we have revenue." And these guys like raised $1 billion or whatever.
Yeah.
So this is like the kind of, mindset I'm looking to have. And I think it's going to really do a shakedown for kind of like competitive landscape as we know it. It's going to be easier than ever to write code. It's going to be easier than ever to launch products. And that's kind of a very competitive and very kind of strange environment to be in, because the rules of the game have changed. It doesn't take you a year to launch an MVP, and it's not going to. So, like, what is happening now exactly?
Yeah.
And if the AI war is just like who can pay more tokens, they're going to win, or like what's going to happen? So it's going to be, again, it's very early days. I've been experimenting with it at home for the last month on myself, but I think it does really create a very significant tectonic shift around how an opportunity looks like, what's going to be solvable, what's going to be, very, very easy to kind of different solutions compete over this. How do you create a competitive advantage over time? So I think it's going to be a very, very interesting times. And these founders that take this on are probably going to be ones that definitely, change the world.
Again, I don't know if it's true, but I've always told there's a Chinese curse that says, "May you live in interesting times." Right? So it's like, I don't know if it's true.
I always say the opposite.
I don't know if it's true, but it's like,
after the last 2 years in Israel, I always say, can it be just like a tiny bit more boring? Like, less eventful, less eventful.
No, you don't get that. No, we don't get that, Mo. We don't get that. But like, I'm, the Buddha says that desire is the source of all suffering. And I think, and then the entrepreneur side, it's the desire for normalcy and stability is the source of all suffering. It's like, that's
There's no desire. There's no desire for normalcy. I don't think. It's not the DNA. It's not the DNA on which founders are built. Founders are not built around wishing for normalcy.
So
they wish for disruption.
Let me ask you this. Do you think, and again, this is maybe a bit self-serving, right? Because we kind of keep going around like this story about the Israeli story about this. It's like, is there something unique about the Israeli entrepreneur?
I think yes.
Okay.
I'll start from the end. I'm focusing on Israeli entrepreneurs. This is where we know everybody, and this is what I do. So I can't extrapolate and say about any other ecosystem or any other DNA apart from the ones that I've come in close contact with. And that can sometimes happen when also companies grow and they bring sales organizations and they bring GMs in other places, and then you see kind of like that difference. But what I see across the board is, and also like in some of my portfolio companies, is we don't like to hear no. We really prevail. We really push, and we make every dollar count. I think it's the most efficient ecosystem in the world, because at the time, and you probably also remember those times, if in Silicon Valley, if somebody didn't raise $1 million, he's not even going to leave his job.
Yeah.
And in Israel, if you raise $1 million, you're going to stretch that thing to the forever. Even companies... Doesn't matter. Even if the company is not going to end up succeeding, they're also not going to close and die. They're not going to raise their hands. They're going to have like a leaner team or a smaller team, and they're going to push, and they're going to go around the wall and then try again, take down the wall. And like, they really don't give up so easily. By the way, foreign investors, sometimes they don't like it because like, if it doesn't work, just like tell us that it doesn't work. Like, don't try to kind of force it. But it's true there's something about us that we really, really prevail. And I think we saw it also in the last 2 years. High tech in Israel delivers no matter what. And we're gonna, we're not gonna, not gonna take no for an answer. We're gonna push through whatever it takes. And I think that kind of resilience, mindset, and DNA is very unique to Israelis. I think also risk taking, because, in other parts of the world, every Jewish mom would like her son to be a doctor or lawyer. And in Israel, everybody wants them to be. My son has a startup. Everybody thinks that it's so great, that it's so amazing. Oh my God. I'm like, yeah, he's the CEO of a one-person, startup, but he raised like,
Using
100,000.
Using AI?
No, but it's true. It's like a real pride for our people. It's something that we take pride in. That innovation, can-do attitude, that risk-taking. Also, it's kind of built in because in America, you go to college, you pay $200,000
You
for
leverage yourself.
education.
You leverage yourself.
You take debt. You
don't
have to
have
take a
healthcare.
job. You don't have anything. And then what? You're gonna stay with debt and gonna what? Do a startup? Like what are you talking about?
All it takes is a bad month and you're bankrupt. That's what
No, completely.
On an individual level.
Or God forbid, you fuck up your credit score and then you can't order what? It's like your life is finished. Yeah. So people are less inclined to take that risk. Now, I went to university at the Technion. My first year was covered because of my army service. So I got, a grant towards my studies, and then I had to pay for 2 years. I said, like when I go to APAC and I go to all these places and I say, I have mathematics and computer science engineering degree from the Technion, and it cost me like $20,000. And they are floored.
Even.
No, sorry, not even that.
Not even that.
Not even that. Sorry, 20,000 shekels. It would cost like 20,000 shekels. And they're like, what? You have an engineering degree from Technion, which is like our MIT. There were sister universities, MIT, and it cost you what? Like $7. What?
Like the infrastructure. To be fair, like this is a capitalist country, but it has some socialistic undertones in the good sense. And I say this is
but it's built in. It's not a bug. It's a feature.
I agree. And also, if you're sick, nobody's gonna let you be bankrupt because you're sick. Nobody's gonna make it.
Because you're gonna have your next door neighbor is gonna bring you soup.
Yeah, that's a
and in America, they're gonna stay away maybe because maybe you have COVID. But no, I think it's really built in, and I think it was thought through. It's not by chance. It's not a fluke.
No.
That we can take more risk because we're less indebted. We're more mature entrepreneurs.
Yeah.
In terms of age, by definition. By definition, if you start a company after college, you are by definition 3-4 years older than your counterparts.
You had the army service.
You had more experience. Yes, you had more experience. And in many cases, by the way, even the 20,000 shekels that you need to pay, so many of my friends, and most of my friends, had to work through it.
I worked. I had a law degree and an economics degree, and I worked full time in IBM, by the way, and covered my.
I liked it.
And covered my tuition.
So I think we're more rough around the edges. We've been through military. Military is a great way to create relationships with people that you would otherwise have never created relationships with. People are going into special units. And I've been to, like, we sponsored a Yalom dinner at the time of the war, and we went down to the base and sat with them. And you would have in the team someone from like the Krayot, someone from Arad, someone from Tel Aviv.
So people who don't understand, and this is the extreme edges of the country, not necessarily major cities. People who don't know familiar with Israel, very different demographics and socioeconomic levels.
And they share a fate. They are brothers. They are imprinted for life. And those kinds of experiences, you can't measure them, and you can't compare it to anything else that kind of like another 20-year-old would have to. Like, I have to trust you with my life. So it's very interesting and complex situations. For older, we're mature, we have the ability to take more risk. We prevail, we push through. We're overly optimistic, but I think this creates and also you get the support. Even if you fail, everybody's like, oh my God, so what are you going to do next?
Yeah, it's
like, and if you fail somewhere else in the world, so you're going to get take a desk job for a couple of years and kind of like chill, or like, what are you going to do? So everybody's rooting for you. Country's rooting for you. Like, everybody wants this to happen. And I think it's really amazing, and it doesn't exist anywhere else in the world.
Honestly, not to this extent. Maybe there.
Not to this extent. Or, listen, there are all these like buttons, right? All this like scorecard that we mentioned. It could be amplified, or,
Again, Silicon Valley, scale, capital kicks our ass. But on the other things, I think we'll do.
But but by the way, it's also very harsh. If you can't get like a seed from X, Y, and Z, you might as well actually quit or like whatever. Because like, it's very difficult.
True. That's actually true, right? That's actually really, really true, because we have a lot of successful entrepreneurs in external companies that just like raise money from somebody. Just right somehow.
Yeah. And I'm like, I said to like, the other day, there was like an early stage investor in one of the companies, like, who is this guy? Like, he invested with us. I'm like, I don't know. He's like from real estate. I'm like, why'd you take money from him? I'm like, who is this guy?
Because he gave me money.
But like, yeah, because he gave me money. And I always say, take the money and run. Yeah, if somebody wants to give you a good deal, always go for it. But yeah, so I think there's it's not a bug, it's a feature. It's ingrained in us. We've been doing this for our survival so many years. And we're supportive of each other. When like somebody asked me, if you see, a company that ended up raising or exited and you saw and you passed, like what are you happy for them? I'm like, dude, super happy. Super happy for every single founder
I don't
in
even
Israel.
understand the question. I don't even understand the question.
Like, do you feel bad? Do you have FOMO? I'm like, dude, I can only make a decision based on the information that I had at the time. And if they figured it out and they did amazingly well, there's no one who would be like their biggest advocate and their biggest supporter but me. Love it when everyone in Israel like can succeed. I would love it. So I think we have a very, very special ecosystem. And I'm really looking forward to some of like, those big names and big exits and everything that has happened last year to also kind of become involved in the younger generation and to be also a little bit more global, build those bridges, bring people kind of excited together with you. It's not about putting in 100 or 200. I also say to founders that are kind of calculating dilution and whatever, and I always ask them to do the exercise because I said, listen, if this is going to be a big company, we all win together. It's not going to matter. Another 2%, it doesn't matter. If it's going to be a small company and you end up selling, then it matters. But then it's a wash anyways for you and for me.
And why are you doing this? Why are you doing this one, like this route?
I learned it. Listen, I learned it from a partner in Spark Capital. It's very close to us, invested in my husband's company. And he said that to me very early. It's like, it doesn't matter so much. People are like incredibly, tied up about their cap table and about ownership and about it doesn't matter because if you model it and if you try, you say, I'm going to do another 2 rounds, whatever, and in big numbers, it does not matter. Partnership is more important. If you end up, it doesn't, even if you end up selling for 20, 30, $50 million, whatever, it could be a profitable exit, but it's not what we came here to do. And if it's not what we came here to do, then it also doesn't matter. So it doesn't matter.
Also, you shouldn't be raising this kind of capital. You should be doing
No, doesn't matter because most companies, and it's hard. It's hard and it doesn't always goes your way. But if it ends up working incredibly well, it doesn't matter. And if it doesn't, it also doesn't matter. Just go with it.
So with this optimistic note, I think it's a good place to kind of wrap. I know we didn't cover everything we thought about covering, but it's a wonderful conversation. More like if people want to find you, where can they reach out?
Okay, so first of all, our website is iAngels.com. You're welcome to kind of see things that we've done and get involved. You can write me at more@iAngels.com. I promise to make sure to be on it, especially after we launch this, because I do know that we all know, email has become very overwhelming, but I really try to be attentive. Try not to write me on LinkedIn. I know it's a great platform, but it's really difficult for me to get to there. So write an email is better. And we're very approachable. We have a fantastic team of what I like to call the special forces of VC. And they're incredible. We would love to see and hear what you're doing. Even if it doesn't work out, and I've even done this week, even if it's not right for me, I would always try to help. And I would always connect you to a person that can give you more feedback or to a customer or someone that I can, if I can help in any way. So yeah. And also for investors who want to see really, really exciting things and invest together with us. We're much bigger than, I shared of kind of like our early days. As I mentioned, deployed over $500 million. We have a lot of fantastic companies. We're raising fund too at the moment. It's already started to be active and also done some great investments and would love to partner with people who are excited about the asset class. They want to see things early, but not like deck early, but already kind of like some validation before. I really think about it sometimes that it's really the last time to come in where it makes sense. Because if it's going to, explode, then it's going to be too expensive. So I think it's really a great place, a great entry point. Yeah. And would love to connect. Thank you so much for having me.
Thank you very much, Mo. It's been lovely.
Likewise.
Cheers.
Take care. Cheers.
It's a wrap. This Ageas podcast episode ends here, but you don't. Now, is it crazy to think that you know somebody who'd love this episode? Share it with them, and they'll love you for it.